And those concerns about the economy may be starting to affect the outlook for overall earnings. Bob Pisani is back with us again to look at how quickly that forecast is changing.
The latest round of tariffs has left Wall Street dazed and confused because trade concerns are now not only weighing on stocks, they're also weighing on earnings projections, and that's what really matters. The weakest sectors today, all trade-related, banks and retail and energy, industrials, and those are the exact sectors seeing the biggest downgrades in earnings estimates for the current quarter. So this is what you want to keep an eye on. So 2019 earnings were looking kind of flattish up until a couple of weeks ago. But additional tariffs are starting to impact those estimates, particularly energy and industrial earnings. They've been coming down fast in the last few weeks. Energy earnings down 21% for the third quarter. That's steeper than the 13% decline analysts had forecast back in the beginning of July. Industrials have gone from up 6% earnings estimates a few weeks ago to now just up 2%. Other sector growth forecasts have also been coming down, including financials. That's been hit by lower interest rates, and specialty retail, which includes many of the big apparel makers like L Brands and Gap. Earnings for the group as a whole now expected to be down slightly. That's not surprising. Shares of many of these retailers have been weak for a long time. PVH, L Brands, Chico's, Gap, all down on the corner. Tiffany, which gets about 16% of its revenues from mainland China, has fallen 7% for the quarter. Don't forget about big tech and Apple. 1/5 of iPhone's revenues now are coming from China. So you put all these cuts together, and 2019 earnings, which have been described, as I said, as flattish going into August, are now starting to look like they could end up in negative territory. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.